All right, good morning and welcome to Market Chat. It is February 26th, and it's time to review what's happened in the markets. Since last week, honestly, there hadn't been a whole lot of new news, just a complete rehash of all of the bearish news that's out there. So, for those of you that are listening to this for the first time, we're here to try to make life a little bit easier. We want to use the charts in order to tell us what is happening and gain some clarity from all the noise that's out there. And when we have clarity, our life is simpler and we can be more efficient with our time by actually looking at them less. So, in the news this week, we have had nothing but pessimism. You can scroll through article after article after article, and you will not find a bullish tilt anywhere in the news. And this is about week 4 of what's happened of that happening. So, kind of the headlines are the coronavirus is freaking everybody out, right? The CDC in the US said yesterday that expect it to come here, and we're going to have to be taking measures to protect ourselves. So that's causing mass sell-off in all of the equity markets. It's causing bond markets to work higher, which of course pushes interest rates lower. You've got the corn carryout looking at 2.7 billion bushels from later this year, and when we look at all of that in context of the South American harvest, it just keeps getting bigger. So there's bushels everywhere. We're growing more bushels. The virus is going to kill us all, and everyone's flooding the dollars, which is making us less competitive because the dollar's rallying. And China's not doing anything. In fact, there's rumors that China is out trying to buy from the Ukraine. They're buying from South America. They're buying from everybody but us. So you look at the news, and it is just absolutely bearish every which way you look at it. So whenever that's happening, it should be a major sign, because when the markets aren't plummeting with an onslaught of bearish news, that should really be telling us something. So this is an old quote. It's a good quote. We used it a year ago. It's apt today. Bull markets are born on pessimism. Nobody ever sees the end coming, and the boat gets totally loaded to one side at the end of trends. So the only thing that's out there that's even close to bullish is yesterday, Lighthizer and Purdue both started talking about the trade deal, and they've started saying that there has actually been a lot happen in the last 10 days that nobody else has seen coming. They're pointing to the Chinese government has been lifting restrictions very quietly, allowing for their private buyers to start buying on the on the open market. So when whenever we have that, you've got this negative news flow, and you have the government officials starting to talk about what may happen. You should be looking for the market to start reacting positively to that, because what we've been in is this constant cycle of bearish reaction to bullish news and bearish reaction to bearish news. When that switches, that's when things will start to go. So I'm going to visit this for the last week. If we have corn, right? We've been saying for a long time that we think that the range in corn is going to expand this year. We think that we're going to have more than $1 range, upwards of $2 in range. Now, we don't know where from, right? But here's the big issues. You've got China, you've got ethanol, and you've got supply. If we can, if the market can discourage a little bit of corn production or gives us a little weather relief, and we get maximum buying from China, we can get higher prices if the carryout starts to drop. If we don't, and that carryout gets to 3 billion, we're gonna break $3. I don't see any. I don't see how with a 3 billion bushel carryout you can't trade in with a 2 in front of it at some point. 2.7, 2.8, we could get pretty close to that. So China really needs to step in and buy it. But what's interesting is that the market's not pricing this in yet. Let's look at the corn chart to start with. So with all of the bearish headlines that have happened over the last 3 and 4 weeks, corn has sold off a whopping 8 cents. With all of that pessimism, corn has not moved. And yes, we have broken out of this downside wedge. We have not taken out this secondary support level here. In fact, we're finding support. A close below here should, below this 74 level, should move us lower. That should trigger an acceleration to the downside. So we want to be leaving hedges in place. I don't want anybody to walk out of here saying, "Oh, we got to go higher because there's too much bad news." That's not what I'm saying. We could take a shot lower here. I just don't know how long it'll last because I don't know what more bearish news we're going to throw at it. And we're not gonna get worse than a 2.8 billion bushel carryout right now. We're not gonna get worse than no Chinese demand. We're not gonna get worse than we're all gonna die. I don't know what we're gonna do to push it lower, other than traders just say, hey, let's just sell commodities like crazy and work lower. I think the sleeper is the dollar. If the dollar starts to really break, then that's going to lend support to all of the commodities, because a weak dollar is not bearish for U.S. ag for a lot of reasons. So as corn moves, we want to beware of this false breakout, right? We've talked about this a lot. We had a false breakout right here. We could have another false breakout to the downside. You still want to go with them. So long puts, long futures back above it, and it will move out of this range eventually, and we're just going to go with it. So don't overthink it. Don't underthink it. Just be mentally prepared that we can work lower. But if the market prices in all of those bad headlines, it'll do it quickly. And once it starts to react positively to it, it'll be a signal those headlines are priced in. Now we got to put some weather premium into the market, and we got to change where we're going. So we'll see what happens with corn. Today's day 2 below, or day 3 below our wedge line, but we have not busted this low. And until that holds, until that goes, you gotta be pretty leery of this level right here. So critical day for corn. All right, let's look at soybeans. Soybeans have been a little bit more bearish. This was a really bad day last Friday in soybeans. We rallied, we broke our high, all systems were go about 9 o'clock in the morning, and then the rout started, and they just sold the tar out of soybeans with a massive outside day down. This was a big sell signal, pointing this low right at right in the crosshairs. We traded to it Monday, and now we've held it. So soybeans. Soybeans are actually showing a few signs of life. So right now, they're all triggering a lower price. This low could be tested very easily. But if you look down here, we don't talk about these indicators a lot, but they're here for a very specific reason, and this is why. We're looking for a disconnect between lower lows and lower highs and volume. We're looking for lower lows to happen on increased selling, not decreased. So what we've got right here is a divergence. So we have this big move to the downside. with these two indicators pushing to lows, see how low and extended these moves got on these indicators? We then rallied, broke the zero lines on both. That's called breaking the back of the bear. We've now moved to a new low with these indicators failing to go with it. So you've got a divergence on your MACD and your force index. A move higher from where we are will confirm that and puts the odds, greater than I don't know what odds they are. They're far greater than 60%. That is a major low, and that we will work higher. So we're going to pay very close attention to this, and we'll likely exit any short positions we have on a confirmation of that divergence. We're not going to buy it yet. We won't buy it until we get a little more confirmation that that a low is in, but we're going to exit short positions if that divergence triggers. And what that tells us is that even a lower trade, once we start diverging, it can do it 2 or 3 times, and each one just becomes a more powerful signal. So we don't want to become overly bearish here into that sentiment. So if we reverse today and trade lower, we will not have a divergence. I want to be clear on that. It's got to trade higher to confirm it, and then that signal would hold above this 879 level. So soybeans are at a critical time, corn's at a critical time, and what that's doing is giving wheat a little bit of pause here as well. And if you look at wheat, you got the same thing. You've got the same divergence in wheat that you've got in beans. So stay tuned to commodities that are diverging into really bearish news, because in my experience, that's not something you want to get aggressively short on. So what we've been doing the past few weeks, or over the past week in programs, is basically holding steady. What we did, we took the following action in the programs last week. We rolled wheat. I did not put new positions on in wheat, but we rolled wheat from March to May by selling the March contract and buying May. We also moved puts out. We moved them from 470 March to 480 May. And the net result of that, we've been off since we did that trade. The net result is a wash. The beans, we exited futures with a 2.5-cent loss, but we've held the puts in the May contract, so small gain. In long, we've been long 3 long May corn futures and long 380 put, and that trade is at neutral. Those are at neutral today. So when you look at the month of February, as we bring it to a close here, if you look at the month of February, wheat has had the most action. Corn has done absolutely nothing. And soybeans have done absolutely nothing since February 1st. So we have not moved very far. With planting season around the corner, I think we're about to see that change. So we'll just stay with it. I think that spread strategy is still the right strategy. Long futures, long puts, and let the volatility come to us, and we'll just be patient and let it happen. All right. Apologize for the background noise, guys. I can't get the mute button to click for everybody. I don't know why it won't do it, but so I do apologize for that. We've been here 15 minutes. I don't have any other magic crystal balls or anything else. The news is the news, and we just got to see what the trade's going to do. So with that, we'll wrap it up for the week, and we will talk to you next Wednesday. I hope you have a great week. Talk to you later.